What's going on, everybody? Thanks for tuning in to another video. And you already know what to do, man. Hit the like button, subscribe to the channel, share the video, and I really appreciate it. Thank you guys for tuning in. But we're gonna get right into today's video and why, or actually, have you noticed that the stock market has been jumping all over the place lately? I know you've seen um, the market was up crazy today. It was down the other day. It's just kind of a seesaw battle. So, in this video, we're going to talk about, kind of break down exactly why the stock market is jumping all over the place and what it means for your money. So, let's jump right into the first thing. We're going to talk about interest rates, right? So, um, when rates go up, borrowing money becomes more expensive. So that kind of slows down spending and businesses. And, which can push prices down in regards to the stock market. So, uh, but when investors think rates might drop, then boom, you see stocks suddenly shoot back up. So the market is constantly reacting to what it thinks is going to happen in the future. So, interest rates definitely play a part of it, as well as global events. That's the next thing we're going to talk about. Global events is also a reason why the stock market can, be all over the place. As we see what's going on, right? Um, Anything from like recession news, inflation reports, job numbers, those things can move the market instantly, actually. So, um, and why? Because investors are trying to predict the future and what's going on. So, when new information comes out, people try to adjust fast. So that's another reason why the stock market could be all over the place. So we're talking about inflation. We're talking about news, global events, things like that. So the next is investor emotions, right? Um, and this is a big one, right? So the market isn't just numbers; it's people, and people react, with fear, greed, panic. They have a whole fear greed index, fear index. So, when people get scared, they sell. And when they get confident, they buy. So this creates constant swings in the stock market. So investor emotions is definitely like a huge piece of the pie. Um, Also, another thing that most people don't realize is big institutions control a lot of the market. So when large funds move billions of dollars at once, it can shift the market pretty quickly. So, and that's why it feels like the moves can be extremely random at times. So these big investors, these big institutions get involved, and that market can go either way. You know what I mean? And a lot of us don't even know what's going on. Um, so yeah. So what does all this mean for you as the investor, right? So, well, I'm not a financial advisor, as you know, but what this means for you is, you should do what you should do with all this information. Don't panic. Don't panic. Market movement is normal. In fact, volatility creates opportunities. So, long-term investors, we understand this. The short-term traders kind of react to it. They know what's going on. It can be cause big trading days for those short-term investors, those day traders. So, me personally, I'm a long-term investor, so I kind of, I understand what's going on. Any pullbacks, we're looking to adjust, maybe add to the portfolio, depends on what's going on, and then we play it out. We ride it out long term. So, for the average investor, don't be too shaken up by the stock market jumping here and there. Uh, so the next time the market jumps up or down, you'll understand why. You understand what's going on. So, and if you like more breakdowns and smart money moves, man, hey, subscribe to the channel, man. Stock Talk David. Let me know in the comments. Do market swings make you nervous, or does it make you excited? Some people get nervous, some get excited. So let me know in the comments what you think. And I will talk to you guys later.